Kirsten Galata, and welcome to the second episode of our Indirect Tax Lifecycle video series. On our first episode, we discussed Nexus, classification, taxability, and sourcing with Rick Heller. On today's episode, we'll be discussing compliance with Brian Little. Hi, Brian.
Hi, Kirsten. Thanks for having me.
Before we dig in, would you mind sharing with our viewers a little bit about your role at Deloitte?
I'm Brian Little. I'm based in Chicago. I'm a partner, and I lead up our U.S. Indirect Transaction Tax Compliance Center of Excellence.
So as the leader of our compliance practice, can you give us a quick overview of Deloitte's approach to sales and use tax compliance?
Sure, yeah. And, in its simplest form, we assist our clients with the timely and accurate filing of sales and use tax and other transaction-based tax returns. And for us, it's a lot about using advanced technology, and I think that's really critical to the process, given how many multiple data sources we get from clients, the large transactional volumes, the quality of data that comes in, and the very short turnaround times when we look at the monthly compliance cycle from the time that we're able to get the data to the time that the returns have to be filed.
So can you share with us a little bit about what that process looks like?
On a monthly basis, like I say, we get those data sets from disparate systems typically, and we extract those, we reconcile them, and then we work to validate the underlying data to make sure it's accurate and complete. And from there, we leverage our compliance tools and our data wrangling tools to identify where there may be variances. And from there, we may be doing data quality checks, and from a jurisdictional perspective, we may be verifying tax types, looking for data elements like new companies or locations and similar items that we know are going to create us issues during the filing process. We also do some pre-agreed adjustments, and that's really designed to address certain anomalies maybe in the underlying data, certain things that can't be fixed on the front end within the software. Maybe it's jurisdictional codings, tax types, those types of things. And once we've done that reconciliation, it's really then reconciling that data to what's ultimately going to get paid to the jurisdiction in the current month. And then, of course, we send it off to our clients for approval. And once the client approves them, that's when we proceed with actually e-filing. And in certain cases, our clients leverage a third-party payment processor and will authorize us to upload the details of anything that needs to get printed and mailed or paid to the jurisdictions to that third-party payment processor. And there's a lot of efficiencies that go along with that as well. And then we essentially at the end of the month give our clients reports back that detail at the appropriate level the breakdown of taxes that they've paid for the month, and we get some custom reports that we can do there based upon the ERP system or front end system requirements.
So Brian, there's no doubt that you're working with a lot of data in transaction tax compliance, but it's not all about the data, right?
Yeah, that's right. And especially here at Deloitte, in the transaction tax compliance space, we think it's more than getting just numbers and putting them onto returns. We're trying to give more insights into the data, and we assist our clients in a variety of different ways. One is just understanding what business and systems changes are in process and how that could impact the compliance process, along with the other open compliance items. We help our clients handle sales and use tax and jurisdictional notices. So as a jurisdiction may send a notice for a late filing or late payments, we'll work with the jurisdictions to resolve those as well. And then there's a variety of different technical updates that happen. Obviously, dealing with as many jurisdictions as are applicable in the sales and use tax space. There's sourcing rules, there's taxability changes, there's rate updates. All of these things that can impact the compliance process, and there's just so many details that our clients are not always aware of them. So that's another area where we definitely try to help our clients. And then, of course, process improvements overall. Updates that may be applicable on the front end tax calculation softwares. Our goal is to have an approach that's a cycle of continuous improvement. So as we identify things and challenges on the back end, it's not just modifying them and making them work on the back end, but actually going back and fixing them on the front end.
Where do you most often find issues or discrepancies?
Yeah, so this is where that old saying comes into play, right? Garbage in, garbage out. I'd say one of the biggest challenges that we have in the compliance process is the quality of the data that we get and the underlying tax calculations that goes into that data. By the time it gets to the compliance process, the tax decisions, unfortunately, have already been made in many cases. And there's some common themes that we see when we get data. One is around consumers' use tax accruals. In certain cases, the front end systems may not have the right level of detail to be able to evaluate the transactions. And sometimes that results in an overcalculation or undercalculation of tax. And that's where some of the technology comes into play with data wrangling and data analytics and leveraging even artificial intelligence and machine learning to improve the underlying tax calculations and identification of where those issues may reside. Another common area that we see on the compliance side is exemption certificates. If there's not a good upfront process in place to collect the certificates, it certainly can result in an overpayment of tax to the jurisdictions. And that could be a real challenge from the compliance side to get that money back from the jurisdictions once it's been remitted. It can create short payments, it can create tax adjustments, tracking of those credits and application of those, and making sure that they're not falling outside of statute periods. All of those can really create a compliance burden. Another area for clients is also tracking the new economic nexus rules and marketplace facilitator rules. Being able to track the amounts, to track the transactional volumes, to know when those economic nexus thresholds have been triggered, and to be able to get registered in the appropriate jurisdictions once that happens. We've also been seeing, companies face a lot of challenges with turnover in the transaction tax compliance area. I mentioned earlier, right, that a lot of returns to get out in a very short period of time. We've seen instances where resources have left the company abruptly and really present challenges for getting those returns filed.
So, Brian, what are your thoughts on how Deloitte can add value to compliance?
Yeah, I would say one of our most important factors is our consultative approach to compliance, and then also the technology that we employ. We do have a national sales and use tax compliance center of excellence. We focus on the efficient and accurate preparation and filing of returns, but we also team with our local consulting resources from a sales and use tax perspective to help our clients through a variety of different issues and a variety of different ways through the sales and use tax lifecycle. Looking at it at indirect tax in a silo, I really think presents real challenges. So, so much of the compliance process is driven by the front end processes. Technology and certainly other tax technical considerations. So I think our broad-based approach really enables companies to be proactive, to identify and analyze challenges that are coming through and happening and fix them on the front end rather than constantly being in react mode. We've also invested heavily in technology, leveraging some of the common tools that we talk about, right? Data wrangling, data analytics, robotics, machine learning, and other custom compliance tools to be able to streamline the compliance process and really promote the timely and accurate filing of the returns. I think one of the main things is having a systematic data quality checks that are in place, having automated reconciliations built into the process, having the ability to have trending analysis, some analytics to identify anomalies in the underlying data. And then technology can also take those large volumes, the millions of records in certain cases, and be able to consolidate and reconcile and help prepare returns in a matter of days. And really leveraging technology, not just in the compliance space, but really makes the entire life cycle easier.
Brian, that was great. Thank you so much for joining us today. On our next episode of the Indirect Tax Lifecycle video series, we'll be discussing exposure and remediation. We'll see you there. Thanks.